For a market dominated by sellers, what you're going to find is a market makes series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Now for this low to be made, it has to break through this old low, and that break is called a break of structure BOS. And for this low to be made, it has to also break through this older low, and it's called a break of structure BOS. Now when you open your charts, you're not going to find it like this. You're going to find what we call candlesticks, that is made up of two parts: the body of this candle and the wicks of this candle, the upper wick and the lower wick, signifying how high the market went to or got to and how low the market got to within that specific time frame. So when you open your chart, you're going to see the candlesticks run like this: the lower lows and lower highs, lower lows and lower highs, then lower lows. Why? Because the market is moving downwards, signifying that sellers are really in control. Now for a break of structure to occur here, for you to identify it using this candlestick, the body of the candle that made the lower low has to close below the lower wick of the body that made the previous lower low. Let's see this. Now that is a confirmed break of structure, because the body of this candle that made the lower low actually closed below the wick or lower wick of the candle that made the lower low. Now let's take a look at this other one. Now this is the candle that made the lower low, the body, and this is the lower wick of the candle that made the previous lower low. Let's take a look at this. Of course, there is also a confirmed break of structure. So let's take a look at another example, making lower lows and lower highs, lower lows and lower highs, then lower lows. Now let's check this for a confirmed break of structure. So this is the body of the candle that made the new lower low. This is the wick of the lower wick of the candle that made the previous lower low. Let's check it for a break of structure. A break of structure is confirmed because the body closed below the lower wick of this candle. And let's check for this one. This is the lower low, and this is the body of the candle that made the lower low, and this is the wick, the lower wick of the candle that made the previous lower low. Let's confirm it for a break of structure. There is no break of structure yet. Why? Because the body of this candle that made the new lower low did not close below the lower wick of this body of the candle, that made the previous lower low. But if, however, another candle prints and it breaks through like this, then this is a confirmed break of structure. Why? Because this candle, the body of this candle, now closed below the lower wick of the candle that made the previous lower low. I hope you find this interesting. So a bonus that I'm going to give you on this is a case where there is equal opportunity for buyers and sellers, the market making equal highs and equal lows, equal highs and equal lows. This time around, the market is not breaking any structure above or below. So what you're going to find is the candles just run, making equal highs and equal lows, meaning that there is an equal opportunity for buyers and sellers in this market. I hope you find this interesting. I'm going to also do another video where I'm going to explain the fact that the market will not always continually going up or go down. At some point, there is going to be a shift in the direction of the market, and that's what we are going to handle next. Thank you for watching, and God bless. See you next time.